Welcome to the Wednesday edition of Tech Stocks Daily. Hold on to your hats because today we're diving into juicy tech drama and exciting market moves. Google faces the DOJ's antitrust hammer with discussions of potentially breaking up their empire. The trade desk is catching Wall Street's eye as bullish traders place their bets. Oracle dazzles with new AI crime-fighting tools and aims for a $1 trillion milestone. And in Roblox land, we navigate between analyst love and bombshell accusations from Hindenburg Research. Stay tuned as we unravel today's biggest stories and what they mean for your favorite tech stocks. Well, it looks like Google's got more drama than a reality TV show at the moment. Let's dive into why Google's making headlines today, and trust me, it's a biggie. The US Department of Justice has set its sights on our favorite search engine giant, and things are heating up like a search query on a caffeine binge. To set the stage, the DOJ is considering seriously reining in Google, thanks to some antitrust antics. Picture this: Google, with its omnipresent search engine, tangling up in legal knots because of accusations that it's been keeping competitors at bay through shady payments and reaching default status on many smartphones' web browsers. If you're a search engine trying to get a break, good luck getting around Google's well-paid firewall, right? The spark for this legal bonanza came back in August when Judge Amit Mehta ruled that Google's hefty payments to ensure default search engine placement on phones breached US antitrust laws. The DOJ, not to be one-upped, announced this week that it's evaluating remedies to restore balance across the digital universe. Cue dramatic music. Now, these aren't your everyday prescriptions. We're talking about behavioral and structural remedies, which in simpler terms means the DOJ is thinking about whether to snip at Google's mass by potentially breaking it up. Ouch. The department is eager to prevent Google's platforms, Chrome, Play, Android, from tilting the scales unfairly in favor of their own search behemoth. Let's talk numbers. Sneaky revenue-sharing agreements and juicy default positioning deals, especially with tech titans like Apple and Samsung, have been brought under the microscope. Apparently, these deals cost Google billions. But hey, who's counting when you rake in 90% of all searches? One potential solution involves introducing a choice screen, where users can opt which search engine gets their goals. Democracy at work, folks. While Google has had some not-so-kind words for these plans, labeling the DOJ's propositions as radical, it's not surprising since many of these changes could shake Google's iron grip on search. Google's Vice President of Regulatory Affairs, Lee Ann Mulholland, even mentioned that dismantling parts of Google like Chrome or Android could bring all sorts of tech chaos. However, before you think Alphabet's empire will crumble and Google gets diced, legal nerds are suggesting it might not come to breakups. Rather, we might see certain exclusive agreements vanish into the ether to promote competition. Adding to the mix, the DOJ has ordered Google to offer alternatives to its Play Store on Android phones in a separate cauldron of antitrust stew. In short, while Google's mountains of cash cushion its fall, it's clear the DOJ has some significant items on its breakup menu. The clash continues with a mysterious final ruling due in August 2025. What will happen to the world's favorite search engine? Sit tight. Whether ruled by iron-fisted dominance or democratized search variety, there's one thing for sure. This saga is going to be quite the ride. Oh boy, the trade desk has been the star of the tech spotlight today, and there's a lot to peel back here. If you're diving into the realm of digital advertising in the stock market, stick around. TTD is shaking things up. First, let's talk options, where big money makes big moves. Today, the options market for the trade desk lit up like a Christmas tree. Get this. Benzinga's options scanner caught 9 eye-popping options trades on TTD, with some heavy hitters. 77% of identified trades hinted at bullish outlooks, while others continued to keep mum. The trading volumes revealed institutions and wealthy folks are possibly expecting TTD to break new grounds. Why else would they play at a price band between $90 and $125? Big money seems convinced there's a golden opportunity brewing at TTD, and they're putting their chips on the table accordingly. Now shifting gears to value stock chats, we've got a matchup worthy of the main event. Enter Akamai Technologies versus the trade desk in a no-holds-barred grapple for value. When you line up the stats, ACAM currently holds a snazzy Zacks rank of number 2 with stronger estimated earnings growth. It's flexing its muscles with a commendable forward PE ratio of 15.77 versus TTD's hefty 70.39. If stocks had biceps, ACAM would be bench-pressing valuation metrics, while TTD leans more towards premium pricing. However, potential investors still have their eyes on TTD's digital advertising allure, despite its shiny F-grade in value categories. Last but definitely not least, let's add some flair with earnings performances. Grab your seats because TTD has been hot stuff with a spiffy 14.9% return in the past month. That's right, folks. Compare that to the 6.4% Zacks S&P 500 composite lift, and you'll see why everyone's buzzing about TTD. Analysts have locked their sights on TTD's future earnings potential, maintaining solid EPS forecasts. In the digital ad game, where growth is king, TTD delivered a pleasant surprise in its last earnings report, with revenue and EPS climbing over expectations. Revenue growth is charging forward at a robust rate, promising enticing changes for the future profits narrative. To wrap this up, think of the trade desk as a company anyone interested in digital advertising should watch carefully. The value battlefield may look tough with contenders like Akamai standing stout, But those big money options trades and rising revenue trends broadcast a message. Some believe TTD has an exciting story unfolding that could send shockwaves through tech markets. This dynamic confluence of investor sentiment, value stock standing, and revenue optimism ensures the trade desk remains atop the discussion boards today. It's a thriller, with every act hinting at more enthralling tech drama to come. Grab your popcorn, this plot is far from finished. Hey tech lovers, buckle up as we're diving deep into the world of Oracle and why it's topping the tech news charts today. Oracle's bringing us all the buzz because it just stepped up its game in the world of financial crime prevention with the launch of its Investigation Hub cloud service. Part of Oracle Financial Services Crime and Compliance Management, this shiny new hub aims to revolutionize how financial crimes are tackled by integrating AI, cutting down manual tasks, and delivering killer insights. It's cooked up in Oracle's cloud infrastructure kitchen and plays well with other FCCM solutions, making banks and financial institutions more efficient investigators. And guess what? This hub isn't just about fancy tech. It's about trimming down the time investigators spend on tasks by a smashing 70%. With integrated graph analytics and AI support, Oracle is doing its best to make sure cutting-edge efficiency and scalability are delivered on a sleek silver server. Platter. But wait, there's more. Oracle isn't just stopping at crime fighting, it's signing major deals for AI demands in the cloud, the largest sales contract in its history, no less. This tech giant's been playing well with neighborhood titans like AWS, Microsoft Azure, and Google Cloud, making sure Oracle Cloud Infrastructure gets the limelight it rightfully deserves. A multi-cloud collaboration? Check. Upcoming global tech advances across hyperscaler clouds? Absolutely. In terms of stock performance, Oracle's been on a roll. Its shares surged by an impressive 65.4% year-to-date. Compare that to its sector buddies like SAP, Salesforce, and Microsoft, and Oracle is outshining with high returns. This high-flying stock gives us a hint that Oracle's been benefiting from strong top-line growth, driven by its thriving data centers and cloud revenue increases. While Oracle has been a hot ticket, some folks think it's currently trading a bit on the pricey side. The stock's forward price-to-earnings ratio sits at a lofty 32.25x, towering over its sector's 26.21x. But fear not, Oracle's optimism isn't just flair, it's also got the substance, with expectations for earnings growth over the next couple of years. Plus, wouldn't it be grand if Oracle joins the exclusive $1 trillion club? It's definitely on the wish list with Oracle's increasing AI investments and partnerships with tech giants like Amazon. If Oracle keeps riding the AI wave right, it's not just a dream, it's entirely possible. So there you have it. Oracle is dazzling on the tech stage today with its strategic cloud maneuvers, stock performance, and the glimmer of joining the coveted trillion-dollar valuation. Keep your eyes peeled on this tech powerhouse and see where it takes us, one Oracle cloud-powered leap at a time. All right, tech enthusiasts, buckle up because today we're diving deep into the adventure park that is Roblox. If you've been anywhere near a screen in the past 24 hours, you probably noticed the buzz surrounding this mega popular gaming platform. So why is Roblox stealing the spotlight today? First, the good news. Analyst Thomas Champion from Piper Sandler has cranked up Roblox's price target to $54 from $48. Why, you ask? Well, Champion surveyed roughly 13,000 US teens and found that 46% are active Roblox users. That's a huge jump from previous surveys. Not only are more teens getting their game on, but fewer teens are quitting Roblox too. Add to that a higher frequency of play, and you've got a good formula for potential stock growth. Just imagine, Roblox is the playground where digital sandcastles are built, fought over, and celebrated. But wait, not all is smooth in Roblox land. Hindenburg Research, known for its spicy short-selling gambits, dropped a bombshell report that paints a not-so-pretty picture of the platform's alleged practices. They're accusing Roblox of inflating crucial user metrics, like daily active users and engagement hours, by some pretty steep margins. According to Hindenburg, Roblox has apparently been padding stats with alternate and bot accounts. Roblox was quick to clap back, claiming their DAU metrics are as legit as grandma's apple pie, insisting on a stringent methodology that keeps counting clean and honest. That's not all. Hindenburg went for the jugular, criticizing Roblox's stance on child safety. Their report called the platform a pedophile hellscape, accusing it of lax screening processes and leaving the digital doors wide open for unsavory characters to wander in. Roblox, however, was having none of this, countering that it has comprehensive safety measures in place to combat misconduct and provide a safe space for its young user base. If you think insider trading's the cherry on this sundae, you're right. The report claims execs have been cashing in big time since Roblox's public offering in 2021. Apparently, insiders made off with a cool $1.7 billion, with CEO David Baszucki allegedly pocketing $115 million in the past year alone. While Roblox sidestepped this specific claim, they're still tooting their horn about a 22% rise in bookings in Q2 2024. All eyes will be on their Q3 earnings call on Halloween for any plot twists or candy. So what do you think of this drama-ridden saga? Is Roblox the digital utopia you think it is, or is it a tale with more layers than a lasagna? Let me know your thoughts in the comments below. Are you Team Roblox or Team Hindenburg? Or perhaps in the middle, munching on popcorn while watching the show unfold? Can't wait to hear from you. All right, let's dig into the question of whether to sell, buy, or hold a stock from today's tech news, focusing on Roblox. Considering the news around Roblox right now, I'd suggest you might want to if you currently own, but proceed with caution on any buying or selling decisions. Here's why. 1. Analyst upgrade. There's some positive news with analyst Thomas Champion from Piper Sandler upping Roblox's price target due to strong engagement trends among teens. That's definitely a bullish signal and points to potential growth, especially with Roblox's high teenage user base, which means they could keep riding this wave. 2. Hindenburg report. On the flip side, Hindenburg's report throws a pretty heavy spanner in the works, with accusations of inflating user metrics and safety issues. This has the potential to shake confidence significantly, especially if the claims impact investor sentiment or lead to further scrutiny. 3. Corporate movements. The mention of significant insider selling could raise a few eyebrows about the confidence levels within the company about its long-term prospects. This kind of insider activity often has investors worried about the company's future performance, even if it might not always be a fair indication. 4. Pending earnings report. With Roblox's Q3 earnings call around the corner, it's a classic wait and see. The report could either confirm the positive forecast from analysts or give more credence to Hindenburg's concerns. Depending on the result, the stock's direction could become clearer. Roblox is straddling a line between promising growth indicators and serious accusations that might hinder its stock momentum. If you're a current investor, you might want to hold tight and wait for more clarity in the earnings report. For potential investors, it could be wiser to see how the company navigates through these waters before jumping in. Remember, this is just one perspective, and it's essential you dive into your own research, considering your financial situation and risk tolerance before making any investment decisions. Stock markets are as unpredictable as a cat on a Roomba, so stay informed and tread carefully. Today's tech market roundup is nothing short of a roller coaster ride through innovation, courtroom drama, and digital advertising intrigue. From the Department of Justice turning up the heat on Google's antitrust headaches, to the trade desk catching the eye of big money movers in the options market, the conversation is buzzing with anticipation. Oracle is flexing its cloud prowess while gunning for that trillion-dollar valuation, and Roblox is serving up enough drama to keep everyone on the edge of their seats with both promising outlooks and serious challenges. If you loved this whirlwind tour through the tech universe, make sure to hit that like button, subscribe for more tech tales, and share the video to keep your friends in the loop. Don't forget to come back tomorrow for another exciting dive into the tech headlines.